All right, get ready, because today we're going deep, really deep, into the world of a market wizard you might not know, Jeffery Neumann.
Jeffery Neumann.
This guy turned a few $1,000s, like what most people have in their savings account, into $50 million.
Wow.
Averaging a 53% return every single year for 17 years.
Now that is impressive. That's the kind of track record most traders can only dream of. That consistency is unbelievable.
I mean, 17 years, 53% every year, compounded.
It's amazing.
We're going to be going through and unpacking his journey based on Jack D. Schwager's book, Unkonwn Market Wizards. We're going to try to get into his mindset, his strategies. We'll look at his big wins. And believe me, there were some crazy times too.
Yeah, and it's really a story that proves you don't need to come from Wall Street. You don't need a fancy pedigree to be successful in the market.
Right.
Neumann's path is anything but conventional.
It really is. So picture this. Neumann starts out as a chemistry major in college.
Chemistry.
Not exactly the typical, Wall Street wonder kid, right?
Right. Not the first place you think of for a future market wizard, right?
But here's where it gets interesting.
Okay.
Even back then, in college, Neumann had this knack for spotting patterns and exploiting loopholes.
Yeah.
You know how colleges have those stock market games?
Oh, yeah, I remember those.
Forget this. He's playing one of these games. Found a glitch in the system and turned $100,000 in play money, virtual money, into $1 million.
Virtual $1 million portfolio, that's still got to feel good.
It's a sign. It's a sign.
Right.
Like he was meant to do this.
Yeah. I wonder, what was the glitch? I'd love to know how he figured that out.
Yeah. You know what? I don't think Schwager goes into the details there.
That's all right. Keep going. I'm hooked already.
But that kind of outside-the-box thinking, that's what really makes Neumann stand out.
Huh?
But how did he go from, mixing chemicals in Bookers to mixing it up on the trading floor?
Yeah, how did he make that leap?
It seems like the trading bug, it bit him hard during those college years.
Yeah.
He loved the challenge, obviously saw the potential rewards, and the idea of achieving financial freedom really early on. He wanted to retire by 23.
Retired by 23.
23.
Let's talk about ambitious.
That's a different level.
Yeah.
So what was his plan in those early days?
What was he trading? Options? Futures?
Penny stocks?
Penny stocks. Really?
He just went headfirst into the world of penny stocks. He was focusing on something called market making.
Market making? What's that?
You buy at the bid price and then you sell at the ask price. You're just taking advantage of tiny, tiny price differences.
Oh, so he was scalping those tiny spreads. Interesting.
Yeah, he was targeting stocks with wide spreads and really low trading volume.
Okay, so finding those less traveled corners of the market where he could exploit those inefficiencies.
He was playing a different game, right?
Yeah. Clever. But risky, no.
And it worked. His first trade ever, he took a $2,500 insurance check and turned it into $1 million trading account in less than a year.
No way. From $2,500 to $1 million in under a year. That's insane.
It's not just luck at that point. That's skill and some serious guts to go with it. But I'm guessing penny stocks, it's a bit of a roller coaster, right?
Oh, yeah, for sure. Lots of ups and downs. So were there any big losses along the way?
There's a story about this swine flu stock trade.
Swine flu stock. Okay.
Lost about 30% of his gains on that one.
Ouch.
So it was a wake-up call.
Definitely a wake-up call, yeah.
Even when you have a winning strategy, risk is always a factor.
You got to respect the market. So did he stick with penny stocks after that, or did he change things up?
It was a turning point for sure. That swine flu trade, and actually another really successful trade that he made involving an ethanol stock, it kind of pushed him towards longer-term trading. This is where he developed his sector trading concept. He would identify entire sectors that he thought were going to, take off.
Sectors with a lot of potential, okay.
And then he would really dive deep into researching individual companies within those sectors.
So instead of chasing those quick penny stock gains, he was looking at the bigger picture, trying to ride those longer-term trends. Smart.
He went from, like a sprinter to a marathon runner.
Yeah. Did this shift in approach, this sector focus, did it change how he picked stocks?
Absolutely. He became deeply involved in the sectors he traded. Take 3D printing, for example. He was really early on that.
3D printing, yeah, that was a hot sector for a while.
Yeah. He really immersed himself in the technology. He even tested the 3D printers himself just to see how they worked.
Hands-on research, I like it. He wasn't just reading reports, he was getting his hands dirty.
So he wasn't just relying on technical analysis. He blended that with a really deep understanding of the companies and the sectors that he was investing in.
So he's looking at the fundamentals too, not just chasing chart patterns.
He was connecting the dots. He was looking at technical signals, like Breakouts, and then also doing his own research.
So he wasn't just buying into the hype, he was building real conviction.
But were there any trades that really stand out, good or bad, that kind of shaped his journey?
Yeah, there's got to be some wild stories in there.
There is this one about his investment in Sponge Tech.
Sponge Tech? What's
It was a penny stock company. They were selling soap.
Soap, like just regular soap?
Just regular soap. And it's a story of massive gains,
Because of course it's got to be.
agonizing losses,
No.
and hard lessons learned.
All right, I'm all ears. Tell me about the Sponge Tech saga.
Well, Neumann, he went all in on Sponge Tech,
All in.
bought millions of shares.
Millions.
And to get the stock moving, he actually started this really aggressive ad campaign himself.
So he wasn't just passively investing, he was out there really promoting the company.
Yeah, he was really trying to make a splash.
That's bold.
It is. But here's where things get a little crazy. Okay, imagine this. The stock is just taking off. It's soaring.
It's going up.
And Norman's on a trip to Kenya,
Okay.
but he's stuck in a tent, limited communication,
Uh-oh.
not able to really watch what's happening in the market. That's a trader's nightmare, being out of touch when a stock's moving like that.
Right.
So what happened?
Well, the stock suddenly tanks. It just collapses.
Yeah.
And he's stuck in this tent, hardly any information.
Oh, that's got to be so frustrating.
I know, can you imagine? Just agonizing.
I'd be pulling my hair out.
Yeah, he ended up losing a lot on that trade.
That's brutal. I mean, it just shows that no matter how well you plan, sometimes, just bad luck can get you.
Being in the wrong place at the wrong time, right? But the story gets even crazier. The SEC actually launched an investigation into Sponge Tech for market manipulation.
Market manipulation.
Yeah.
So this really became a defining moment for Neumann.
It did. It shows that you can't just focus on picking stocks. You got to know the rules of the game. You got to understand the whole regulatory landscape.
And don't get too involved in promoting a company.
Right. It's a good reminder that even the best traders, they can make mistakes. Big mistakes.
And those mistakes can have some pretty serious consequences.
But it's also about learning from those mistakes, coming back stronger,
So after all this, after all these ups and downs, these lessons learned, did Neumann have any specific rules, anything he followed, any kind of roadmap to help him navigate the market?
He did, actually. He calls it his 4 corners methodology.
4 corners. Okay.
And it's all about finding those trades where everything lines up perfectly.
High conviction trades?
Exactly, like a checklist to help him filter out all the noise and just focus on the best opportunities.
So break it down for me. What are these 4 corners?
All right, so corner number 1, that's all about the chart. He wants to see specific chart patterns that are going to signal a breakout or a strong trend.
Classic technical analysis.
Yeah, classic technical analysis, looking for those clues that a stock is ready to make a big move.
What about corner number 2?
Number 2 is all about liquidity and volatility. He likes stocks with fewer than 200 million shares outstanding.
So he can get in and out of positions quickly.
Exactly. He doesn't want to get stuck, especially with stocks that can move really fast.
Makes sense.
Corner number 3, this one's interesting. It's all about the story.
This story.
Yeah, he wants to see a catalyst, something that's driving the stock. Could be a new product, new management, something happening in the industry.
So not just patterns on a chart, but real-world events, the fundamental.
Exactly. He wants to see a story that makes sense, something investors are going to get excited about.
A narrative. Okay, I like
All right,
this.
and the final corner. This one is probably the most important.
Lay it on me.
In-depth research.
Research.
This is where Neumann really shines. He's digging into those company filings, SEC filings,
Getting into the weeds.
scrutinizing management. He really understands the business inside and out.
Wow, he's going deep.
Oh, yeah. He's not just skimming the surface. He wants to know everything, form his own opinions.
He's not taking anyone's word for it. He's doing his own homework.
Exactly. And that takes a lot of time, a lot of work.
It does, but I guess that's what sets him apart, right? He's willing to put in the effort.
Yeah, he's not afraid to roll up his sleeves and get to work.
But even with all that, even with the most detailed process, everyone slips up, everyone makes mistakes. So what are some of the mistakes Neumann has admitted to making?
Well, one of his biggest regrets is getting out of trades too early.
leaving money on the table.
Yeah, he says he gets spooked sometimes by, all the noise in the market, the ups and downs, even when he still believes in the trade.
So letting fear or doubt get the best of him.
Happens to the best of us, right?
Yeah.
Are there any examples, like any specific trades where he wished he had stayed in longer?
He talks about his ethanol, 3D printing, and believe it or not, even his crypto positions. He got out of all those too early.
And those all went on to do really well, huh?
Yeah, and it just shows that even when you have a system, even when you have a plan, managing your emotions, it's a constant battle.
Yeah, it's a huge part of trading, controlling your fear, controlling your greed, and just sticking to the plan, even when it's tough.
And so that's a key takeaway from Neumann's story. It's not just about charts and numbers. It's about mastering your own mind.
Absolutely. He's not just a brilliant analyst. He's learned to control his emotions, and that's huge.
But there's another piece of the puzzle, risk management. How does Neumann protect himself when things go south? Because in the market, sometimes it's going to happen.
Right, and that's where his approach gets really, really interesting. It's a mix of, classic strategies and then some pretty unique thinking.
Okay, I'm intrigued. Let's unpack this risk management style. How does he do it?
One thing that's really important to him is having a clear exit plan before he even enters a trade.
So he's not just thinking about winning, he's already planning for if things go wrong.
Exactly. He wants to know how much he's willing to lose before he even starts.
He's got a plan for all scenarios.
Yeah. And he uses a combination of technical analysis and, get this, his golf course indicator.
His what? Golf course indicator.
Yeah, I know. Sounds strange.
Yeah.
But it's actually brilliant.
All right, I'm listening. Tell me more.
So if Neumann is out on the golf course with his buddies and they're all talking about the same stock, how everyone's suddenly an expert.
Oh, yeah, I've been there.
That's a red flag for him.
Interesting. He's using that hype, that excitement as a measure of risk.
Exactly. If everyone's jumping on the bandwagon, that's usually a sign that the smart money is getting out.
I've never thought of it that way.
Right. He wants to find those hidden gems, the stocks that no one's talking about yet.
Makes sense. So if that golf course indicator starts flashing, if everyone's buzzing about a stock, what does he do? Does he just get out completely?
Not always, but he starts taking some chips off the table, He'll reduce his position.
So he's not being stubborn. He's adapting.
He knows the market can turn on a dime. He's not going to ride a losing stock all the way down.
He's nimble. He's reacting.
He's always watching for those signs that the trend is changing.
It's like he has a sixth sense for market psychology, knows when the music's about to stop.
But what about those times when a trade's clearly not working, When it's really going against him, what's his plan then? Does he use stop-loss orders?
Stop losses.
Yeah, those orders that automatically get you out of a trade at a certain price.
So he's got like a safety net in place.
You'd think so, right. But actually, that's where his approach gets really different.
Okay, tell me more. How does he protect himself without those stop-loss orders?
It's more about his gut feeling, He doesn't have those hard and fast rules, no automatic exits.
So no safety net. That seems kind of risky. How does he know when to cut his losses without those stop losses?
It's really about experience. He's got this deep understanding of how the market works. And he uses his technical analysis skills, of course, but a lot of it comes down to that gut feeling that he's developed over years of trading.
Intuition.
Intuition, exactly. He's always watching his positions closely, taking the market's temperature, you could say.
So it's more dynamic, not just reacting to prices, but seeing the bigger picture.
Right. He's looking for those signs of weakness, Maybe the momentum is slowing down, or the price breaks below a key level, or maybe the overall market sentiment just feels off.
So it's like reading between the lines, picking up on those subtle clues.
Exactly. And it takes practice, Most traders, they wouldn't even notice those things. But even with all that, isn't there still that danger of getting attached to a losing trade, hoping it'll turn around?
Yeah, everyone hates to admit defeat.
Hey, it's human nature. But Neumann's different. He's incredibly disciplined. He's not afraid to cut his losses, move on, even if it hurts a little bit. He knows that holding on is just going to make things worse in the long run.
That's tough, though, knowing when to let go.
It is. But even though he doesn't use hard stop losses, he always has this mental stop loss in mind.
A mental stop loss. What's that?
It's a price where he's already decided to exit the trade, even if his indicators haven't told him to sell yet.
So it's more like a line in the sand. A point where he says, okay, that's it.
Yeah, it's about having that discipline, knowing that things don't always go as planned. Okay, let's talk money management for a minute. How does Neumann decide how much to risk on each trade? Because that's just as important as picking the right stocks, right?
Absolutely. Protecting your capital is key.
Right. And Neumann's strategy is pretty interesting. He doesn't have a fixed percentage or anything like that. He's more dynamic, He considers his conviction level, how strongly he feels about the trade, and also what's happening in the market.
So if he's really confident, he'll bet a bit bigger.
Yeah.
But when the market's shaky, he'll dial it back.
Exactly. And another thing, he scales into positions gradually. He doesn't just go all in at once.
So he's testing the waters first.
Yeah, he might start with a small position, and if the trade starts moving in his favor, then he'll add to it. It's called pyramiding.
Building a pyramid, brick by brick. Smart way to manage risk.
And he's also not afraid to scale out of positions. If the trade starts going against him, he doesn't get stubborn about it. He'll take some profits off the table, or maybe even exit the trade completely.
So he's flexible, he can adapt.
Always. Now remember the 2008 financial crisis?
Oh yeah, everyone remembers that.
Right. Well, while most investors were panicking, losing their shirts, Neumann, he actually made over $1 million that year.
Seriously, during the crash.
Yeah, incredible, right?
How'd he do that?
He became really, really selective, only taking those trades where he had absolute conviction. He was waiting for those rare opportunities with a huge upside and very little downside risk.
Wow. So he didn't let the fear get to him. He just stuck to his plan.
And it really shows that he treats trading like a business.
Not a gamble.
Exactly. A lot of people, they think they can just, outsmart the market, get rich quick. But Neumann, he's disciplined. He's focused on managing risk, growing his capital steadily over time.
He's always learning, always trying to improve his strategies.
That's what separates the professionals from the amateurs.
All right, so as we wrap up this deep dive into Jeffery Neumann's world, what's the one big takeaway? What should people really remember?
I think the biggest lesson is have a plan and stick to it. Don't just wing it.
Right, like those 4 corners you talked about.
Exactly. You need a set of rules to help you identify those good trades, manage your risk, protect your profits. And you got to follow those rules even when it gets tough.
Even when you're feeling emotional, when the market's testing you?
That's when discipline is most important. And that's how Neumann has been so successful. He's got the skills, the knowledge, and the discipline to just execute his plan day after day, year after year.
And that's what it takes. It's not just about being smart. It's about having that mental toughness. It's like trading is this mix of art and science, right?
Yeah, you need the intuition, but you also need the analysis. And you got to be able to adapt.
Well said. And that's Jeffery Neumann in a nutshell, a true market wizard.
Absolutely.
So for all you traders out there, take these lessons to heart. Develop your own plan. Figure out how much risk you can handle. Find your edge. And remember, it's a marathon, not a sprint.
Be patient, be disciplined, and never stop learning.
Great advice. Thanks for joining us on this deep dive. Until next time, happy trading.